boomers, beware. Okay, so this is a friendly message and not like, you're dumb, you're stupid, what are you doing? Oh, it's you guys have been doing really well over the last number of years. Not all of you, of course, but boomers, it's time to think, if you haven't already, it's time to think about protecting the wealth you currently have. Okay, and if that hasn't been in the form of precious metals yet, today might be the time to start thinking about it at least. So if you're watching this right now and you've got, again, friends or family that are in that boomer category, so that's anywhere from, I think, 65 to something. I can double check that. But send this to them. Okay, not a bad idea to at least have a think about it. Now, we did touch upon this actually quite a bit on Friday, but I want to do a special message to the wonderful boomers out there who we love. I'm a Gen Xer, love my boomers though. They've helped me out in my time, so it's time to help them out too. Let's share the screen. Why? Very quickly, because you guys have seen it before, but in case others haven't, this is the gold to stock market ratio. Okay, it's currently going through a period where gold is highly undervalued to the stock market. It's currently going through a time where we might be seeing, and it's very likely at this stage, nothing is guaranteed in life, of course, but where gold is going to flip the stock market, meaning it's just going to go into a period where it highly outperforms the stock market over the next number of years. If you want to call that 5 years, sure, that's up to you. If you want to call it 10 years, sure. Okay, but there is a period where it will continue or it will start to massively outperform once again. This is the, again, gold to stock market ratio. As this is going down, it's way better to be in the stock market. Now, why am I targeting the stock market and gold in particular? Because for the boomer generation, you've gone through decades and decades of the last, 30, 40 years around about, where the stock market's done probably very well for you. If you've just parked your money into, if you're in America, for example, if you just parked it into the S&P 500, or if you're in Australia, for example, you just parked it into the ASX 200, the big indices. Okay, you've probably done really well. If you parked it in your big blue chips like your Commonwealth Bank or your Telstra, or you're one of those and you're getting dividends, you're probably doing really, really well, or you've done really well with stocks and you've been able to increase the wealth that you have. Now we're coming to a period, this is in 2011, where it's actually, so between, and maybe you missed this cycle, okay? This cycle between 2005 and 2011, you would have increased your wealth more by swapping your stock market, all your stocks for gold, okay, and riding that wave. And then since 2011 until around about now, we're in this bottoming area here. It's been much better to stay in stocks, okay? Stocks will way outperform gold, but we are doing a flippening once again, okay? So how long that will go for, I don't know. And where will it top? I don't know. But a lot of people in, who have been precious metal stackers and are following the market, etc., can see a starting, it doesn't mean it's going to happen right away, but a ticking over on the stock market. You've certainly seen, if you've been following the news, the rise in gold prices just recently, and just over the slightly longer term as well. It's only going to continue in that direction in the next, again, 5-10 years, roughly. So that's the ratio, but I guess we can take a look at the individual prices as well. I just want to show you the stock market, in particular, say the NASDAQ and the S&P 500. And what can you do once you have this information? Well, I'll give you some information about that too. How do you buy gold? How do you get into it? And all that kind of stuff, okay? And there's a lot of people watching right now who can also help. So if you pop a comment in the chat, tell our wonderful boomer, and a lot of people who are watching are boomers right here, but if you're a boomer that's woken up to it and you realize that the gold flipping is happening, tell your other boomer friends and family how you can do a post a comment right now. How do you get into gold? What's the best place to buy gold from? Let's go right here. We'll show you these. So that's the ratio. You can very clearly see, and I'll just quickly show you again, how this 0.5 level is the key level right there. You can see, and again, we did mention this yesterday, but just really want to touch upon it again for the boomer special, okay? Right here, it's the 0.5 level right there. You start closing months above there again, it's really going to signal a takeoff. Now, can it range for a bit? Can it take a bit of time? Absolutely. But the flipping is occurring, okay? It'll be much better to be in gold or silver than in the stock market, okay? Let me show you the stock market, for example. We are pretty up there. Okay, now some boomers would say, well, I mean, gold's pretty high as well, but so is the stock market. But you've got to look at the indicators, what's saying what. Okay, so for example, you can see obviously the stock market has periods where it goes through long consolidations. Okay, so back here in 2000, at the end of the dot-com bubble, roughly, it took approximately, that's about 7 years. So if you bought up here in 2000, it took 7 years to recover to get back to that same area. Okay, but then it had another dip, so it was a double top. So you actually didn't make any money. If you bought the stock market, the S&P 500, for example, in 2000, you didn't start making money until 13 years later, maybe 13 or 14 years later. Okay, that's a long time. That's a long time for your capital just to be, sitting there. Now, maybe you were smart enough and you realized, you saw the tick down and then you sold down here and bought something else. Sure. But a lot of people would have gotten trapped around here and they just would have kept us like, I'll just wait until it goes back up. Yeah, took 14 years to do so. And since then, we've been this has been a big move. Okay, since, what are we, that 2012 level? So over 12 years, we've pumped 280% to where we are now. So if you've enjoyed this run in the last 12 years, if you're up in the stock market, okay, congratulations. As we all know, nothing goes up forever, and it's very important to watch what your particular asset is doing in relation to other things. Is the thing that you're currently in quite overvalued in relation to other things? And that is very true in relation to the gold market, okay? Let's see, are there more signs of a potential ticking over, at least on the weekly or the daily timeframes? At least on the weekly, we had a little bit of a downtick in stocks. We closed the last week a little bit down, okay? Well, you can see it's a little bit of waning momentum. Now, does that mean it's just tanking from here? No. With the stock market, it takes a long time for it to start to correct and then for the signs to really kick in, okay? But what you can see, at least on the weekly time frame, you can see pretty clearly right there. And actually, you can even see from way back here. Okay, again, you can see how the price can keep going up, but the momentum is waning. So price going up, okay, but then you look at it on the relative strength index, and you can see that that's on a downward trajectory. Or really, I should probably take it from here. Okay, so that's from about June last year, and this is from there. And you can see the relative strength index moving down. Okay, so that would be a traditional bearish divergence, a higher high, but a lower high. Okay, and you can see, the momentum, it's just starting to tick over more. You can see kind of like this dome or this arc starting to form like that. Okay, we're probably at like the, towards the top end of it. And then you can see very clearly right here, again, higher high on the weekly. And then if I just zoom in and move that there, you can see that's there and there. So let me move that for you right there so you can see a little bit more. Right, so you can see definitely it seems like that the momentum is starting to wane. Are we at the top now? Is it going to take a bit of time? And are we at the top? I don't know, and neither do you, but it's really something to consider for the wonderful boomers out there. And of course, this is for anyone else watching as well, but just a message to the boomers who have done really well in stocks over the last number of years. Maybe you think gold is dead and it's never coming back. If you want to maintain the wealth you currently have, or even potentially increase it over time to pass down potentially to your kids or to your grandkids, really need to look at this particular ratio. So that's the S&P 500. It looks like it's starting to tick over here. Okay, but does that really matter? Okay, let's say, for example, the stock market continues just slowly grind. Now you could get higher. It could go up to 7,000. It could go even higher. But what is the price of other things doing at the same time? Okay, so sure, you could just keep it in here, starts going up a little bit, but then the momentum continues to wane. So you could you could push, or you could squeeze the lemon a little bit more, and I'm going to wait until it hits there and I'll get another 10%. Okay, cool. But what's gold doing at the same time? What's that ratio doing? Okay, so for example, and I'll take a look at the NASDAQ as well very quickly. I think that's even showing more like bigger signs. It's about similar right here. So this is the NASDAQ, so tech stocks. Okay, very similar thing. You can see on the weekly time frame, we had a higher high, but gee, it wasn't anywhere near the kind of steep angle. Okay, so it's looking like it's ticking over, closed, and then that very clear bearish divergence right there. So that's on the sort of the micro. Okay, and if you take a look at it on the little bit more macro, okay, similar thing. Cool, cool. Again, does that mean it can't have these quick little pumps back up and everyone goes, oh no, the party's still continuing? Yeah, but the steam is starting to run out. It looks like at this stage. Could I be wrong? Yes. Am I an amateur? Yes. Do I listen to other people who are better at me than what I do? Yeah, absolutely. So I follow their opinions as well. So it's kind of like a conglomeration of everything, including my own personal opinions, right? Based on the weight of evidence. So that's the NASDAQ, for example. So they're the two biggies. And then once again, we come back to, let's take a look at the gold price. Okay, so here is gold on the weekly time frame, priced in USD, okay, 2,935. Now, it is going through maybe a tiny little bit of a momentum loss, okay, but this is over the short term, I would say. So this is the gold price. And yes, many boomers were going, well, gold's really, really high too. Yes, but one will be outperforming the other, okay? So do you want to be in the assets that are both very, very high, but the ratio to one or the other is one is highly undervalued to the other? Well, I would suggest that would be gold. Okay, let's again go back here. Gold, where are we? Gold SPX ratio, right there. And you can see again. So I showed you the gold price, the S&P 500, the NASDAQ, for example, and this is it. Once again, it is absolutely going to tick up at some point. Does it happen this month, for example? What is the, again, this is the weekly time frame. Let me show you the monthly. What is the big signal? Well, closing any month above that 0.5 level. Okay, we've had a bunch of spikes, spike here, spike here, spike here. Could we spike here and then February it's just a resistance again? Sure. But at some point, look at this. It is just, the momentum is really knocking on this door right here. And the more times you knock on it, the more likely it is to open. Okay. I don't see, personally, the following happening, where it does this, then it does this, and then it goes dunk like that. That doesn't seem right. Okay. Gold, again, just it's in a new bull market. Okay. Stock market's been overvalued, looking overvalued for quite a bit. Looking overvalued recently, I should say. Momentum is waning. That is more likely. When it happens, I don't know. Does it happen here, or does it take a few more months? I don't know. But once we do that and we start closing the month and then we hold this as support, okay, then it's just onwards and upwards we go, very likely, up to this kind of level. And we're talking, ignore the time frame. Could it be 5 years, 3 to 5 years? Could it be 10 years? But we're talking at least to parity, so 1-to-1 with the points of the stock market, at least. Again, as I said last week, this is a point where many people would probably decide, and maybe you would as a wonderful boomer, you would decide to, I'm going to swap my gold back for wonderful points of the stock market, and great, you've really upped your stock market indices. Cool? Yeah. Your shares of the S&P 500 or the ASX 200, whatever that is. But this is coming. Okay, I'm very confident in that. Many other people are. Could we be completely wrong? Yes. But boomers beware. Okay, stock market unwinding, it looks like, but at least putting a portion of your wealth to maintain the wealth that you have through the ravages of inflation, for example, which eats away at your savings. Put it in gold. It will match with inflation over time, or even beat it at some points. And if you at least maintain your wealth, and with this, watching this ratio, you can even increase your wealth over time by getting those highly undervalued stocks later on down the track, whenever that is. So boomers beware. It is coming, in my opinion. And if you would like to know how to get into gold, well, we can answer those questions for you right now.